Good day, everyone. You are welcome to your lovely program, Banking Helpdesk, from GVTV, Glorious Vision Television Station. Today, it promises to be another good session for us because of the topic we are discussing. The topic most Nigerians are just discussing without having insight, a desired insight. So today, we just want to give you an overview of Nigerian tax reforms. We will still come in the nearest future to really delve into this matter. But today, just have the overview. Most of us are tax education illiterate. The only thing we know how to do is to complain. That's the only thing we know how to do, to complain. Oh, I've been overtaxed. What do? You have tax education? If you don't have it, your money is gone. But when you have tax education, you know how to tackle some problems. All you need to do is sit down, add one or two together, and then get the principles of taxation, at least the one you need at your own level. We are not talking about your professional need. Because 99.99% of Nigerian population are not vast in terms of tax computation. But when you have tax education, you know what to say about tax. And you have the knowledge of the one that has to do with you, one that is related to you. So today, we are discussing summary of Nigerian tax reforms. The episode for today is summary of Nigerian tax reforms. Now, we have tax reform in Nigeria recently, signed into law by the President of Federal Republic of Nigeria. And the aim, in summary, is to consolidate and repeal more than a dozen outdated tax statutes. We have previous dormant or passive tax laws. They are just there. And the public officials who have the heart of exploiting the public, we just go into the stock of all these statutes and pick the one that people are not aware of. That's from January 1, you'll be paying social amount to local government. And enforcement will start. Nigerians will just be complaining. To even sit down, go into the archive, examine what is happening to them. See, look, the way we do things in this country, no government will save us. We deliver ourselves. How? By educating ourselves in the proper manner. The government, the present federal government, has just gone into the history of the status of taxations in this country. And they discovered that many of these laws are just what? They are just passive. And some of them are by nature instrument of oppression. That's just it. And the government decided to set a unified direction. And that is what the tax reforms are all about. Consolidate on the appropriate one, the useful one, and repeal more than a dozen of outdated tax statutes to set a unified direction. For one, personal income tax. Personal income tax, that is the tax that is coming on your earning as an individual, going by the name personal income tax. As a salary earner or as a sole proprietorship, as your business is what you do alone, and just little business, you are the MD, you are the worker, you are whatever, personal income tax will be applied on you. It is strictly personal, going by the name. The next one is corporate income tax, and that is the tax on the profit made by a company, a public liability company. It can go on to affect a limited liability company, even partnership, once your business is registered. And that is what the current government is looking at. When you have tax reforms, all these aspects of taxation have been overhauled to make government know what is happening within the economy. Number C is value-added tax. Nigerian populace are now waking up to know about VAT. Recently, the government was saying, oh, we want to increase VAT. Or let me say, some people advocated for an increase in value of VAT. That is value-added tax. And people rose up. No, don't do it. You know, there was a time it was 3%. And from 3%, 5%. From 5% to 7.5%. That's the ruling rate now. And some people proposed that it should be moved to 10%. Those who are drinking beer, and the prices of bottles of beer will do what? Go up. Coca-Cola. Nearly all the commodities, with the exception of farm products, like tomatoes, pepper. And if not because the government is having a rethink, though in case of pepper, no value is added. Pepper is coming as pepper from the farm. Tomatoes are coming as tomatoes from the farm. Pineapple, pawpaw, as they are coming in their natural state. But the moment a kind of processing is carried out on them, then value-added tax will come. So we have value-added tax, and we have petroleum income tax on petroleum transactions. Like what? What comes to mind? That is when you buy from petrol stations, the amount of money you are paying per pump price, that is 1 liter, you have VAT already built in. And that is why, if not because the government had not added to VAT or had not increased VAT, the prices of something would have gone up. But because they have not done that, that is why we are still having it. If they had jacked it up to 10%, we would have had increase in what? In petroleum pump price. So petroleum income tax. And when they collate, it is forwarded to federal government. The next one is withholding tax. What do I understand by that? Withholding tax is upon all your investment. I just want to pick one or two. That is return on investment for your shares. Or, again, fixed deposit account. Let us restrict ourselves to the two. With the interest paid to you, what happens? You have withholding tax. And they are collected and forwarded to state government where you live, or where the bank that is having the account, that is we are housing transactions in your account, where the bank is. So withholding tax is on earning from your investment. The next one is capital gains tax. It's different from withholding tax. Going by the name, capital gains tax. That is when the value of your capital, let us say, when the shares you have in a company increase by virtue of allocation to you through right issue. Yeah, right issue. You know, there's an issue we call right. Is only something like that can only be given to existing shareholders. Existing is different from a bonus. is different from bonus. Bonus are not transferable. Right issues are transferable. So something like that can attract what? Can attract capital gain because your capital in a company has increased. The next one is education tax. Education tax. This on the value of education you are acquiring or giving out, like schools. On the income of the schools, or let's say the incomes to the schools are taxable. Yeah, they are taxable. And the government knows how to generate it. An episode is coming on that. The next one is stamp duty tax. Is on importations. You have stamp duties. This is the amount that is going to the government. They are built into the bills you are going to pay while importing. It's not a new thing. And that falls under essential fiscal policy of the federal government. So from that, we go to example of a personal income tax. Currently in Nigeria, the rate is 21.1 for those who are earning above 800,000 naira. The rate is 21.1%. Time is coming when we draw a comparison between the past rates and the existing one. But for now, for example, a worker earning 100,000 naira per month will be taxed at the rate of 21.1%. That is, if your salary is 100,000 naira per month, that's applicable in the present dispensation. I know 100,000 naira per month times 12 will be 1.2 per annum, meaning that your total earning per year is above 800,000 naira. So you are taxable. And the person will go home. The person will go home. That is, let me repeat that again. That is 21% of his gross income. So all things being equal, he will go home with 78,916 naira per month. 916,000 naira per month, having been taxed at the rate of 21%, 21.1%. All other additional income like Christmas bonuses, leave bonuses, where applicable, we are taxed of 25.8%. That is if you are taxable. This is marginal tax rate. That is the rate at which your bonuses are taxed are referred to as marginal tax rate. That is on our immediate additional income. Get it straight so that you'll be able to sit down and marry your transactions. Now, the most significant amendment are decisions to exempt individual. The Nigerians need to know about this. Yeah. We are not praising the government. One, and number two, we are not partisan in this station. But that is what is just coming out. A recent policy development in Nigeria, tax reforms. The decision to exempt individuals earning 800,000 or less annually from tax is a welcome development. It's a welcome development. It's 800,000 naira and below as your annual income are not taxable. Those of you earning 800,000 naira or less, your income are not taxable according to the latest policy. Number two, the government of today had decided to retain VAT at the rate of 7.5%. 7.5%. That is, as that is being done, we have the prices of some essential commodities still being kept at their prices. And that is why we are not having a negative ripple effect. A negative ripple effect, where an important product like the pump price of petroleum, petrol, where, for example, it is tampered with and we record an upward movement in VAT, you know what will have been happening now? Complaints will have filled everywhere. But the government has decided to still keep it at 7.5%. The next one is corporate tax to encourage business activities. All the PLCs, the limited liability companies are still having their tax payable to government at the rate of 30%. 30% of their profit, mind you, not 30% of everything. And when I say 30% of their profit, that is after appropriation. After appropriation. After taking out donations, taking out some other things, according to law. It is then they will now remove 30% of their profit. Now, the essence of tax reforms is the following: to cap it up, to make sure that we know how far the government of today has gone before, because people rarely talk of this achievement. If we want to lay it before us, for 1 week, we'll still be discussing it. We just want to give a summary. We just want to give a summary. When it is subjected to a political debate, you might not be able to get what you are supposed to get. As a low-income earner in Nigeria, see individuals who are earning low 800,000 below. Because a political discussion will take you to the negativity. But just hear this. Essence of tax reform is to comprehensively overhaul the Nigeria tax landscape to drive economic growth, increase revenue generation, add regional disparities in tax administrations, or address the case of regional disparities in tax administration in Nigeria, and on the overall simplify compliance procedures. That's the essence of tax reforms. I take it again. To comprehensively overhaul the Nigeria tax landscape. Most Nigerians are not paying tax. Yeah. So, what have they been doing with the money? Why not play your own role? To overhaul Nigeria tax landscape, to drive economic growth, increase revenue generation, address the case of regional disparities in tax administration, and on the overall, simplify compliance procedures. How? Very soon, banks are going to be involved. And when banks are involved, many things can be gotten through the banks. Compliance procedures can be gotten through the banks, because the banks have load of statistical base through which the government can extract facts. So in conclusion, the recent reform in tax administration in Nigeria is a welcome development. I want to advise that we sit down and get the documents, read and peruse. You will see what the government has done. And we pray that the gains of the tax reforms will be used to better the lots of the general populace. It's on this note, we are calling it a day today. Thanks for watching. And we are still coming to give you more hints concerning tax reforms. The station is still GVTV. Thanks for watching, and bye for now.